Welcome back to the cryptowrld channel, everyone. My name is Josh, and right now, Bitcoin is potentially repeating history, while Ethereum is rejecting from short-term resistance, and Solana is about to potentially confirm a new bearish pattern, which I'll talk about later in the video, so definitely watch to the end. First of all, just giving you a quick update here on the weekly Bitcoin charts, and of course, right now the price of Bitcoin is still running into this major area of resistance on the weekly time frame, sitting in between around 36,000 to 38,000. And once again, as I said on the channel quite a few weeks ago, all the way back down here at this breakout back during around the middle of October, I said back then on this channel that the price of Bitcoin will likely move up towards around this resistance at around 36 to 38k, but this is where the price will struggle at next, and obviously that is what we are seeing right now. The price is definitely struggling, at least in the short term, around 36 to 38k. And so of course it's possible we could see some sort of rejection from that resistance before potentially breaking out later on at some point. But if we do ultimately see a confirmed breakout above around $38,000, whether that's sooner or later, either way, if we break 38k with confirmation on the weekly time frame, then the next major level of resistance is sitting at around 42,000. But at least for now, once again, we still need to focus on this resistance at 36 to 38k. And technically speaking, even though the price is struggling in the short term, of course, we're still technically within a much larger bullish trend, which obviously I've been saying since around the beginning of this year here on the weekly time frame. But obviously, if you zoom into some slightly smaller time frames, like the daily chart, for example, we can see more short-term bearish and bullish trends on the daily chart, which if we're taking a look right here on the daily Bitcoin chart, we can clearly see that over this year, we have had multiple short-term bearish and bullish trends that have occurred throughout the larger bullish trend here on the weekly time frame. And so as always, it is important to understand the difference between the different time frames. So for example, I can remain very bullish on the much larger time frames, on the trend on the larger time frames, while potentially being a little bit more bearish in the short term, for example. And right now, the price of Bitcoin obviously does have an active bearish divergence right now on the daily time frame. We have confirmed higher highs in the price in the candle closes, while confirming lower highs in the daily Bitcoin RSI. And obviously, I've been talking about this quite a lot recently on the channel, basically letting you know that this signal is telling us that the bullish trend on the daily time frame, this short-term bullish trend, is losing momentum. And so the most common outcomes that we see from a bearish divergence on the daily time frame is either choppy sideways price action in the price of Bitcoin, if not a pullback in the price of Bitcoin over the next few weeks or so. And obviously so far it's been roughly around 1 week since this bearish divergence confirmed on the daily Bitcoin chart, and so far we have been seeing a lot of choppy sideways price action on the daily time frame as expected. And if we simply take a look at the last two bearish divergences on the daily Bitcoin chart, we can see this bearish divergence in early July and this bearish divergence that confirmed in around mid-April. And as you can clearly see on the Bitcoin chart, both of these previous bearish divergences resulted in a larger pullback, basically a short-term bearish trend on the daily time frame, which is basically just a pullback within the larger bullish trend. But it is important to understand the difference between what we are seeing right now and what we saw these last two times. And the major difference we need to pay attention to is, of course, the US dollar index, because this red line right here is the US dollar index, also known as the DXY, and the candlesticks is, of course, the price of Bitcoin, also on the daily time frame. And as we can clearly see in these past two larger pullbacks or short-term bearish trends here in the price of Bitcoin on the daily charts, these both occurred at the same time as the DXY moving to the upside. Of course, the DXY was very bullish during those exact same time periods where the Bitcoin price was bearish. But obviously right now, what we are seeing in the DXY is a major dump to the downside. The DXY, at least as of right now, is very much bearish. And so once again, as I've explained in recent videos here on the channel, when the DXY is bearish, that is usually a bullish signal for the price of Bitcoin, as we can see throughout Bitcoin's history. Once again, the DXY was bearish just here. We saw a lot of bullish price action for Bitcoin, and we saw the exact same thing right here in late March entering into early April, and also the same thing right at the very beginning of 2023 and the very end of 2022. And so essentially, while the DXY or the US dollar index is continuing this dump to the downside, it's unlikely we will see a significant pullback in the price of Bitcoin. And now, obviously, we can still see day-to-day volatility in the price of Bitcoin, meaning it's, of course, still possible to see smaller short-term pullbacks, like, for example, 5 to 10% pullbacks. That is, of course, in the realm of possibility, even if the DXY is dumping. But when it comes to larger pullbacks or short-term bearish trends, like what we saw here or here, I'm talking about around 20% pullbacks in the price of Bitcoin or more. In order for that to happen, we really need to see a reversal in the DXY back to the upside. And so essentially, if you're betting on the price of Bitcoin returning back towards around 30 to 31K or anything lower back into the 20K range, basically, if you're betting on seeing those Bitcoin prices again, you're basically betting on the DXY having a bullish reversal. And obviously, the DXY is essentially the value of the US dollar against other fiat currencies, and how the DXY or how the US dollar can actually gain value again against other fiat currencies is essentially if interest rates in the US go higher in comparison to other interest rates outside of the US. Because obviously, global investors around the world are looking to get the best return on their money. And so if they're looking to lend money to a government, for example, to get a stable interest payment, of course, if the US government, for example, is offering to pay more interest compared to the British government or the Australian government, then investors are going to lend more money to the US government in the form of buying US treasuries. And of course, in order to lend money to the US government, aka buy US treasuries, you have to have US dollars. So you have to buy US dollars, which pumps up the price of US dollars. And so essentially, if interest rates within the US go higher in comparison to other countries, that can help the value of the US dollar also go to the upside, meaning the DXY go to the upside. And how interest rates could go higher within the US is if inflation in the US gets worse. Of course, that would force the Fed to raise interest rates again. But while inflation is continuing the downtrend, of course, that is good news for interest rates, basically interest rates coming back to the downside, which is actually not so good for the DXY, which is really good for Bitcoin and crypto. And so basically for the bulls out there, the Bitcoin bulls out there, you're hoping for lower inflation. Essentially, that is bullish. But for the Bitcoin bears out there, you're hoping for higher inflation numbers, meaning higher interest rates, meaning DXY going to the upside, meaning Bitcoin and crypto going to the downside. But at least for now, while the DXY is dumping once again, it's unlikely we're going to see a massive pullback or significant pullback in the price of Bitcoin or a short-term bearish trend like what we saw back here. And so at least in the short term, once again, we could just see very minor pullbacks, like 5% pullbacks, for example, possibly a 10% pullback. But I wouldn't necessarily expect anything major to the downside until we see a major bullish reversal in the DXY. And so essentially, this bearish divergence on the daily time frame is mostly resulting in choppy sideways price action as the other most common outcome from a bearish divergence. And if you're zooming into the shorter term, looking at the 8-hour Bitcoin chart, of course, we're still technically within this short-term bullish trend in this ascending parallel channel. And right now, this ascending line of support is sitting at approximately 35.8K, and this line of resistance is sitting at approximately 38.3K to 38.4K. And so at least for now, of course, while the price of Bitcoin is still forming higher lows and higher highs, we are clearly still within a short-term bullish trend. But as I've also mentioned recently on the channel, of course, the 8-hour Bitcoin RSI is definitely diverging from the price. As the price is going higher, of course, the RSI is trending lower. And so essentially, this is a signal telling us that we are technically losing bullish momentum in this bullish trend, but we have not actually confirmed a bearish trend reversal. And so once again, this is one of the reasons as to why we've seen a lot of choppy sideways price action as of recent. And if you're zooming into the 1-hour Bitcoin chart, of course, over the last few days, we saw this ascending triangle pattern breakout on the 1-hour Bitcoin chart. And as I mentioned on the channel right back here near the point of the breakout, once again, we had a technical price target for this pattern at around 37.6K to 37.7K, which the price of Bitcoin basically perfectly hit before we saw that short-term reversal. And so obviously, if you bought some Bitcoin or entered a trade near this breakout and exited that trade or sold that bit of Bitcoin for this specific trade around that price target, you obviously did very well as I've recorded in this video. And if you want to take these trades in the future, either these breakout trades to the upside or reversal trades back to the downside, you can take those trades over on Bybit. And I'll make sure to leave a link to Bybit in the description down below and in the pinned comment, where personally I do most of my crypto trading. And in fact, if you use that link down below this video, you can claim up to a $30,000 deposit bonus just by signing up through that link, completing KYC and making your deposit. But unfortunately, there's some countries around the world where due to regulations, you may not be able to access Bybit. And so if that's the case, there is also Bitflex as an alternative crypto exchange, just like Bybit, but you do not need KYC. And in fact, if you use the link down below this video to make a Bitflex account, you can claim up to a 10 USDT bonus just by making an account, depositing $100 or more, and making one trade on the exchange. And that $10, that 10 USDT, you can actually withdraw. So it's basically a free 10% return on a $100 deposit. But that is only if you use those links down below this video. You can claim those extra deposit bonuses. And so if you're going to trade crypto anyway, you might as well check that out. But anyway, getting into the Ethereum part of this video, this is on the weekly ETH to US dollar chart. And of course, as of recent, we have run into that major area of resistance, which I have also talked about here on the channel, sitting in between around $2,000 to $2,150 based on these two previous highs. But this is also forming a much larger ascending triangle pattern, which is technically a bullish pattern. But of course, to confirm the pattern, we actually need to break out above resistance, so above $2,150, which obviously as of right now has not yet happened. So at least for now, we are still forming the ascending triangle pattern. And in fact, if you're zooming into the daily ETH to US dollar chart, over the last 1 day or so, we have seen a slight pullback. And of course, as I've mentioned recently on the channel, the daily Ethereum price oscillators are currently showing a lack in momentum, which is why we have been seeing a lot of choppy sideways price action here in the price of ETH on the daily time frame as of recent. And simply based on the daily Ethereum price oscillators, this could potentially continue at least over the next few days. Once again, potentially some more choppy sideways price action. And as for support and resistance, we do have this Fibonacci level of support, which is sitting just above 1.9k. But in a more bearish scenario, if we actually confirm to break back below 1.9k, then in that case, we also have support at around 1830 and support in between around 1730 to 1750. And as for short-term resistance, we do have a bit of short-term resistance at around 2030 based on these two previous highs, and also some more resistance in between around 2120 to 2150. And now if you're zooming into the 8-hour ETH to US dollar chart, of course, over the last few days, I have been talking about this hidden bullish divergence pattern, because obviously we have higher lows in the price of ETH in the candle closes while confirming lower lows in the 8-hour Ethereum RSI, which is technically a hidden bullish divergence. And so essentially this means we're due to see potentially a bit more of a bullish relief, and the point of invalidation for this specific hidden bullish divergence would be a confirmed break back below this low, which is sitting at around 1920. But even in that scenario, even if we broke below 1920, of course, once again, that would invalidate this hidden bullish divergence pattern, but we could potentially form a new hidden bullish divergence pattern if we're still forming a low above around 1.8k, because of course, we could still be sitting in lower lows in the RSI if that happens, while the price could be forming a higher low if we bounce before 1.8k. And so basically for the short-term bearish scenario to begin playing out, and in order to invalidate any chance of a hidden bullish divergence pattern forming again, we would need to see a confirmed break back below 1.8k. But at least for now, in the somewhat shorter term here on the 4-hour time frame, we are currently forming a descending broadening wedge pattern, which is technically a bullish pattern. And right now, this descending line of resistance is sitting just underneath 2030, and this line of support is sitting at approximately 1860. And so basically, we need to see a confirmed breakout well above 2030 in order to actually confirm this pattern and set up the price targets for this pattern. And if you want to know more about the technical price targets for this pattern, then check out my last video here on the channel. And now taking a look at the 4-hour Solana to US dollar chart, right now Solana is at a critical point, because basically we're at the point of a potential break to the downside for this new head and shoulders pattern on the 4-hour time frame. And technically speaking, a head and shoulders pattern is a bearish pattern, but we still need to actually confirm a break below this line of support, which is sitting at approximately $55. But if we end up seeing that happening, if we see a confirmed break below around $55, then that would set up a technical price target to the downside sitting at approximately $44. And so from the point of the break to the downside, basically from where we are right now to that potential price target, that is roughly a 20% move to the downside, which could come next for Solana if we confirm a break below that line of support. But even in that scenario, we could also find some short-term support around this previous low right here, which is sitting at around $51 to $52. And so just keep that in mind. Even if we break to the downside for this pattern, we could bounce at around $51 to $52 based on this previous low acting as support. But either way, whether we break to the bearish direction or if we bounce here back into the bullish direction or we simply chop around sideways, either way, you can make money in crypto by watching these videos popping up right here on your screen. The video in the top left shows you how to make money if the price is bullish or bearish using AI, and the video in the bottom left shows you how you can easily profit from choppy sideways price action. But anyway, that is everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.